We detected an unusual trade worth $24 million on Microsoft stock, ticker symbol MSFT. But here's what makes this even more interesting. Microsoft is scheduled to report earnings in a couple of weeks on October 29th. And so in this video, we'll analyze this unusual option activity to uncover what this wealthy investor is doing. Are they bullish and buying ahead of earnings, or bearish and selling, betting on a potential crash? Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. Now, speaking of our members, if you're in our membership, you've already started to profit from our analysis on Microsoft stock. That's because we entered a short bearish trade last week on this day, October 7th, when we first detected an unusual trade on Microsoft stock. As you can see here, this was the email we sent to members alerting them of unusual option activity detected on October 7th. And so we analyzed those unusual options in Microsoft stock, ticker symbol MSFT, and went short bearish when the stock was trading around $524 per share. And now it's trading lower at around $514 per share. So it's already profitable even if you shorted the stock instead of buying these November 14 options at the 525 strike puts. And so if you want to start getting access to these profitable trade alerts, including these email updates, consider joining the membership on our website. We'll link it up here. Now, if you're not a member and missed this trade last week, you might be wondering, is there still another opportunity? So let's take a look at the new data to find out what wealthy investors are doing. As we can see here on the options time and sales tape, the most unusual trades happened on October 13th at 11:02 a.m. in these November 14th options at the 515 strike puts. Thousands of contracts for these same puts were traded multiple times, showing strong institutional activity and clear conviction behind this move. The repeated large block orders suggest this was not just retail noise, but coordinated positioning from a major investor. What makes this even more interesting is the timing and consistency of these trades. They appeared in quick succession, just seconds apart, which often signals algorithmic execution or a large trader spreading out orders to avoid detection. They were also being traded at exactly the same options price of $17.60 per contract. But remember, options are priced per share, and each options contract controls 100 shares of stock. So to get the actual dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each of these contracts cost $1,760. And so to calculate the total cost this wealthy investor spent, we multiply this price per contract by the total number of contracts traded. Since multiple transactions were made for the same options, we add up the quantities 5,000 plus 5,000 plus 2,004 plus 1,204 plus 723, which equals a total quantity of 13,931 contracts. And so we multiply this total number of contracts by the price per contract, $1,760, and this equals a total trade cost of approximately $24 million for this unusual option activity. But keep in mind, the earnings report is being released in a couple of weeks, and while this unusual trade may appear bearish, this wealthy investor could actually be hedging a bullish stock position with put options, a common way to manage earnings risk. That's why this is considered a higher risk trade in comparison to the trades that we shared on our website. And so if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this trade is higher risk, we still took it because this was still an unusual trade being opened. How did we know these were opening trades and not closing trades? Well, let's check if this wealthy investor is actually opening a new trade and not simply closing a previous trade. Because if a wealthy investor is closing out contracts or trades, it could mean they're worried about that stock. So maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening new contracts, it could signal an opportunity for us to start a new trade. This data is very important to confirm because it strengthens our analysis, increasing our probability of profit. So to do that, let's first see how many open contracts existed when this unusual trade was made. This is the historical data from October 13th, the day this unusual option activity happened. And so, looking at the November 14th options at the 515 strike puts, there were 1,081 open contracts in the open interest. Now, if those 13,000 contracts that were just traded are new opening trades, then the open interest should be more now, adding to these previously opened contracts. So let's check the updated data now on the option chain for these same November 14th options at the 515 strike puts. And we can see here at the 515 strike puts that the open interest has now jumped to 17,000 open contracts, a significant increase from 1,000 open contracts previously. So this confirms that those 13,000 contracts that were just traded were new opening trades because they were added to the open interest. This is why we always take the extra steps to verify the data at a deeper level. Many other websites and scanners simply report every high volume unusual trade without filtering out closing trades, and that often leads to false signals, wrong results, and losses for those following unusual option activity. And that is why our deeper analysis gives us more winning trades than other websites. And in this case, our deeper analysis confirmed that this was a new trade opened by this wealthy investor, not a closing trade. So now, with that confirmation, we bought these 515 strike puts and got into the same position, marked as POS, which stands for our position. The green color indicates a buy position. But remember, we had an earlier position at the 525 strike puts, so we actually rolled them into this new position by selling them and using our profits from this previous trade to buy these 515 strike put options. That means we entered this new trade at a credit, locking in profits while reducing our cost basis and overall risk by using gains from last week's trade. And so when we analyze our trade now, you can see here on the risk profile graph, the buy position cancels out the sell position because they are the same November 14th options at the 525 strike puts. So we are just left with the 515 strike puts that expire November 14th. And so on the graph, the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading above the zero break-even line as the share price goes down, this trade becomes more positive, more profitable. In other words, this trade is going short bearish on Microsoft stock. And since we locked in profits on this trade already, you can see that if Microsoft stock goes up from where it is now, our trade would not have a significant negative loss unless it rallies much higher. And even then, that loss would be relatively smaller than if we had not rolled our earlier options trade. This is how we manage risk, by minimizing losses while still staying in the trade to gain more profits. But keep in mind, this was only possible because we followed that smart, wealthy investor early, back on this day, last week, before the stock dropped. So if you want to get access to our strategies backed by our deep analysis and trade alerts, just like this one, when a well-informed investor positioned early with this trade, then sign up on our website. We'll link that here. Because the next time a wealthy investor makes an unusual trade, you'll want to be in early, not chasing after it's already moved. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.